Tensions are escalating in the UK between banks and tech companies over who should be responsible for compensating victims of online fraud. Starting October 7th, banks are mandated to reimburse victims of authorized push payment fraud of up to 85,000 euros. This type of fraud occurs when scammers trick individuals into sending money by impersonating trusted entities. The new compensation requirement is around a response to rising fraud rates linked to digital transactions. Yet it has raised concerns about the financial burden on the banks at the moment. While the amount is way lower than the initially proposed, which is around 415,000 euros, financial firms feel that they are shouldering the responsibility for scams occurring on social media platforms. Critics argue that companies like Meta should also contribute to compensating victims as they benefit from the transactions taking place on their services. The rise in online fraud has been dramatic, fueled by increased reliance on digital platforms for payments and purchases. Many financial industry representatives believe that social media companies should take on a greater role in preventing fraud and compensating affected users. Given the amount of fraud that originates or stems from all these platforms, they've called for tech firms to be held accountable, and they're growing with some government proposals suggesting that they should reimburse the victims directly and not the banks. Tech companies, on the other hand, argue that they are not responsible for the actions of criminals and emphasize the importance of collaboration with banks to combat fraud. They believe that joint efforts to share information and improve fraud detection systems are key in addressing this issue. Well, as the debate continues, both sectors are urged to find a balanced solution to protect consumers from the rising tide of online scams.